Hello and welcome everyone to the week ahead commodity report for the 5th to the 9th of November 2018, presented by myself, Phil Carr, at the Gold and Silver Club. On Friday, of course, we had non-farm payrolls and we've seen some significant moves in the markets over the course of the last week. So non-farm payrolls data did provide some support to the US dollar. US job growth rebounded sharply over the month of October and wages recorded their largest annual gain in 9.5 years, which could help the Federal Reserve be on track to raise interest rates in December. Now, bear in mind, next week we do have an FOMC statement as well, which is scheduled for Thursday at 7 o'clock London time, and that can often provide some explosive moves and certainly opportunities with gold, silver, oil, and also the US dollar as well. Now, gold did slip on Friday after the US dollar regained some ground off the back of strong US jobs data, putting gold on track for its first weekly loss in 5 weeks. And hedge funds and money managers, they have raised their net sell short positions in COMEX gold and silver contracts over the last week. This also comes off the back of oil prices falling 1% on Friday, notching up a weekly loss of over 6% as investors have worried about oversupply after the United States said it will temporarily spare 8 jurisdictions from Iran sanctions, which come into effect over November. And hedge funds and money managers have now cut their bullish positions in crude oil to a 1-year low. That's the 5th consecutive week of cuts during a month when prices have now posted their largest drop since July of 2016. Oil prices are now down over 18% over the last month. So with that, we'll move over to the charts and we'll talk you through our levels as we go into next week. Firstly, let's move over to gold, which closed on Friday at $1,232 per ounce. We actually saw the anticipated move on gold over the last week here, which was a revisit back towards that previous level of key resistance here at $1,211, which then turned into support. So in the week ahead report last week, we discussed the potential for gold to roll over, break down from this rising wedge price structure, which is exactly what it did at the beginning of last week. We broke down 3 days of consecutive selling here with gold until we saw this capitulation move here on Thursday, which moved over 200 points, in fact, off the lows here, breaking back out towards the weekly highs. Gold still very much remains range bound, so we're moving still within approximately a $25 range or 250 point range here week to week, and essentially what you want to do is capitalize on that range. So the optimum buy-in zone with gold over the last week was that revisit back to that very key level of resistance, which was $1,211, the 38.2 Fibonacci retracement level as well, and that also resided around the monthly pivot too. So we springboarded off that zone and now we're at the upper end of the channel here again. So we've got certainly some resistance here which resides at $1,237, and ultimately the monthly pivot and also the weekly pivot in the upper Keltner channels, they reside at $1,243. So as we go into next week, and particularly you want to be getting ready for the FOMC statement on Thursday next week as well, which can be a catalyst for some big moves here with gold. Usually as we get closer to an FOMC statement, as we have towards the end of next week, that tends to favor upside on the US dollar, and it could put some pressure on gold later on in the week. Then of course on the actual FOMC statement itself, we can often see breakouts on that news item. What I would look at here going into next week is again just trading the range on gold. Resistance right now does reside at that upper end of the range, which is 1243 up to 1250. So if we were to see a breakout, those would be the levels that I would look at for targets on the upside. If we do roll over again with gold here and we do start to come back down towards the lower end of the range, again the zones of support, they reside at $1,220, and then below that we will be looking for support to come in again at approximately $1,211. And what we want to do going into next week is very simply trade that range. So if we were to get a breakout with gold, we would be targeting back towards 1,243 to 1,250, and if we did see a rollover in price, the move that we would look for would be the price coming back towards 1,220 and then 1,210, just very simply trading within that range at the moment for gold until we get a full-on breakout out of this current ricocheting of price action between resistance and support. So that, in my opinion, is the best way to be trading gold at the moment. I would also keep an eye on silver prices here as well. Silver did actually break out back towards 1-month highs here on Friday after the non-farm payrolls. What I would keep an eye out for silver at the moment is the higher time frames. Okay, so you really want to to be focused on the weekly chart at the moment, which has been building up a base here for quite some weeks on silver. So we've been building up a really strong basing formation right at the lower Keltner channels here. There's a lot of clean air once we can clear above $15 per ounce with silver. That is where it could really start to get going to the upside here. You have to remember that silver started off the year at $17 per ounce, and it's still trading right now way below that. It's at $14.73 per ounce at the moment. Even last week, the gold to silver ratio again broke out to 10-year highs, hit 85 to 1, so it still favors silver performance over gold over the next 2 to 3 months here. We would expect silver prices to be a stronger performer than gold. Also, if you want to have a look at a correlation in terms of the price structure here, I'll draw your attention just to platinum, which has really got going and broken out to 6-month highs last week. And you can see this basing formation, which is a couple of weeks further on than silver at the moment. It's actually broken above the neckline here. You've got a really nice V-shaped reversal price structure, which has been in formation since August here, since we put in the lows, where we broke down to $750 per ounce on platinum. And at the moment, we've really seen a solid breakout above a lot of that resistance. That would be similar to if we were to see silver breaking above $15 per ounce. So I would certainly have silver on your watch list over November, December, and into January as well. Particularly December and January tend to be stronger months for silver, especially over the last 5 years if you go back historically on the charts. And then we'll move over to crude oil. So if we have a look at crude oil on the daily chart here, you will note that crude oil has broken down to 6-month lows. And in fact, last week we rolled over, broke back below the weekly pivots here, and we flushed all the way back below $65. In fact, on Friday, the low for oil was $62.49 per barrel. The next key level of support, if we were to see more rollover to the downside next week, does reside at $61.18 per barrel. What I would really look out for, especially next week in terms of headline news items, will of course be the US sanctions on Iran. Also, the markets are going to start getting ready for the OPEC meeting, which takes place on Monday, the 3rd of December. So traders will really start to gear up for that news item, which is just less than a month away now. And we can often see that have a huge impact on the oil market. That is definitely a news item that you want to be having in your diary. We'll of course be trading that at the Gold and Silver Club. You're very welcome to join us for those sessions where we will be preparing to trade OPEC meeting as we go into December. But right now, certainly the price action is still fairly weak here for oil. We don't have a reason to be buying right at this level at the moment, but at the same time, to short it at this zone, we are getting quite oversold at the moment. So what I would look out for again going into next week is that $3 to $4 range. So if you take into account that we've actually closed here at $62.88 per barrel here, and we do tend to move week to week within a $3 to $4 range, if oil was to just have no support going into next week and roll over, it could easily come back down towards 61 and then $60 per barrel below that, which would take the price back towards the February and March 2018 swing lows. At $60 per barrel, I would look for support certainly to come in at that level. If we hold at the zone from Friday, which was $62 and approximately 85 cents per barrel into the close, and we start to springboard higher as we go into next week, again within a $3 to $4 range here, we could easily have a move then back towards the weekly pivot from last week, which could take the price back towards 65 to 66 US dollars if we were to see the price get supported at the beginning of the next week hold and then start to catch a bid for crude oil at the beginning of next week. So that's what I would look at going into next week, that $3 to $4 range. Also, FOMC statement next week on Thursday can be quite a big mover for crude oil as well. So just bear that in mind, but it really does have a big impact on gold and silver, the FOMC statement that we have on Thursday at 7 o'clock London time. And of course, if you'd like to join us at the Gold and Silver Club and join a community of successful traders, there is an opportunity for you to do so. If you would like to get access to all of our services and get real-time trade alerts, which are delivered via WhatsApp, email and SMS, have access to mentorship, expert advice, in-depth market analysis and trusted insight so you can know earlier how to act quicker and maximize your return on every trade opportunity. For more information, please go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will get in touch with you ASAP. Also, make sure you subscribe to our YouTube channel. That way, you will be kept updated with the latest commodity reports.